Take your trading to the next level using a no-coding skills algo creator. Build a fully automated trading strategy. Here's an Ichimoku Kinko Hyo trading strategy. It's a very simple one, and you can achieve similar results. For most retail traders, it's not because you do not know how to trade or that your strategies don't have an edge, but it's simply that the human emotions come and interfere with your trading. But once you get rid of your emotions, you will see an equity curve similar to this. Before going into the Ichimoku strategy with these equity curves, it's important to understand how the Ichimoku is constructed and how it works. Although Ichimoku can come up with quite a few strategies, for this particular video I will just be concentrating on a single strategy. However, I would encourage you to sort of explore and play around with it to find the best options for you. So let's go and deconstruct the Ichimoku. The Ichimoku Kinko Hyo indicator is a very versatile indicator. You can come up with several strategies from a single indicator. It's sometimes referred to as a 5-in-1 indicator because it shows you the trend direction, momentum, future price action, and it also provides you with signals. The Ichimoku cloud indicator is composed of 5 lines that are computed as follows. 1. The blue line, the Tenkan-san. This is also known as the conversion line. Tenkan-san is usually plotted as a moving average of the midpoints of the past 9 periods. 2. The yellow line. This is the Kijun-san. This is also known as the baseline. Kijun-san is usually plotted as a moving average of the midpoints of the past 26 time periods. 3. Senkuspan A. Senkuspan A is plotted as the midpoint of Tenkan-san and Kijun-san with the line projected 26 time periods into the future. Senkuspan B. Senkuspan B is a moving average of the midpoints of the past 52 periods with the line projected 26 time periods into the future. Together, Senkuspan A and Senkuspan B form the Ichimoku cloud. And the 5th line of the Ichimoku indicator is the Chikou span, or the lagging span. Chikou span is the current closing price plotted 26 time periods back. For faster and more frequent signals, traders observe the Kijun-san and Tenkan-san lines in relation to the price. The Tenkan-san line is a shorter time period moving average that reacts to trend changes faster, and it also takes into account recent price extremes. Its slope shows the market trend, and when it moves sideways, it signals a ranging market. Tenkan-san is essentially a signal line. A buy signal is produced when the Tenkan-san crosses the Kijun-san, while a sell signal is generated when the Tenkan-san crosses below the Kijun-san. The Chikou span, a buy signal is generated when the Chikou span crosses the price from below, while a sell signal is produced when the Chikou span crosses the price from above. Chikou span crosses with Kijun-san and Tenkan-san can also provide confirmation signals for buy and sell orders. For this particular video, I have decided to focus on the Ichimoku cloud. I have maintained the default settings of the Ichimoku. I have not changed anything. The basics of this strategy is that when price is below the cloud, it's sell. And when price goes above the cloud, it's a buy. And when price is within the cloud, you stay out of the market. It's simple but effective. So based on this very simple strategy, these are the equity curves achieved on different time frames over a 365-day period. Okay, let's put the strategy together. Here are the strategy parameters. As I said, I left the Ichimoku settings at default, which is 9, 26, and 52. So that did not change. You can try this strategy on a 5-minute, 15-minute, 30-minute, or 60-minute time frame, which is what those equity curves represent over a 365-day period. This strategy, you can use it for the full session. When I mean full session, anytime from European Open to Chicago close. And when I say Chicago close, it's 3 p.m. Chicago time. Try and avoid activating this strategy at the Chicago Open 8:30 on the dot, because price is extremely erratic sometimes and you can make large losses during that period. So set it to start at 9 a.m. Chicago time. For this particular equity curve, I put down 3 contracts per position, and this is specifically for the NQ. It works well on the YM and ES. You need to play around with the RTY. As for the profit targets, I've set it so that you take profit at 20 ticks for the first position, and then the second position at 40 ticks. By this time you have reduced your risk, so that you just leave the third position as a runner, and this will be closed by a signal in the opposite direction. As for entries, I've set the algo to open at market orders, and the stop loss, I've used the parabolic SAR, and it trails the price. So for instance, if you've made some money and price comes back on you, you are protected by the parabolic SAR as long as price has moved. Okay, so why don't you try this strategy for yourself and see if it works? Why I would say that it needs to be an automated strategy is simply the reason that as a person, you will be tempted to move your stop when you are incurring losses, and you will cut your profits very quickly because you're scared to wait for the market to play out. So you will be tempted to close your position before the full price has been reached. So I suggest testing it manually and automatically and see what works better for you. Okay, if you want to learn a little bit more about how to put the algo together using the platform that I'm using, get in touch with me. Okay, I hope this helps. If you've enjoyed this video, please share it and subscribe. The next indicator I will take a look at will be the MACD. The MACD is a favorite of many traders. Let's see how it performs within an algo. Okay, see you in the next video. Why don't you join me in my live trading room daily? I trade the European Open until just before the Chicago Open, that's 8 a.m. Chicago time. However, if price is not moving during the European session, I will trade the US session. And when I trade the US session, I do not activate my algo until 9 a.m. until 3 p.m. See you then. Bye.